I'm going to be recording the session as well for today. Welcome to day number 2. Today we are going to be talking about a different topic altogether. Yesterday we spoke about the introduction of BTMM. We spoke about the introduction of BTMM. Those who are still having troubles, I'm seeing messages here, people saying that I can't hear anything. Those who are having troubles with their audio, please make sure you exit the meeting. You then rejoin again using internet audio. Don't worry. We need 500 participants, so there's still space for you. Even if you exit and come after 2 minutes, there's still space for you. Right now, we are running close to 200, so don't worry, there's still space for you. Today what I'm gonna do a quick rundown of what we did yesterday, and then we quickly go to the charts of the pairs that we spoke about yesterday. Then from there, Arthur, Mr. Romantic, I know you know him from Forest Plugs, is then going to teach us about London patterns. I felt London patterns, they are also one of the topics that you really need to learn, London patterns. So he's going to teach us about London patterns. Then when we do the London patterns, then from there we are going to do examples as we move on. So guys, thank you for your cooperation in joining the Zoom meeting. This is absolutely free. Even tomorrow when you come in for the 3rd day, make sure that you share with other guys. This is for free. And please don't sell the link. I know some of you are already seeing a business opportunity of selling the link. Someone was telling me that I'm going to sell my seat for 10 screw. Please, this is absolutely for free, guys. Now, so yesterday we spoke about the market maker cycle. Yesterday we spoke about the market maker cycle, and we tackled certain key points or key things from the market maker cycle. I'm just giving out a revision. So we said this is what we call an M formation. Sometimes it is called a peak formation. Sometimes it is called an HOD. Sometimes it is called an HOW. Sometimes it is called an HOM. This all depends with the time frame you are in or the cycle you are talking about. So there are a whole lot of things that we consider when we talk about this. And we said this one is called an LOD. An LOD meaning law of the day. It's called the law of the month. It's called the law of the week. We said it's called the peak formation law. We said it's called the W formation. Then we said this is called a stop hand. And we said it's called a pullback. And we also said that this is also called a pullback or a stop hand. And we also said that the M is also called a stop hand. This is also called a stop hand. Now, but their trapping behavior here is advanced than the trapping behavior they do right here. Yesterday, we spoke about why the market ended up having these M's and W's. And so these are just the basics. And please get me right. I know some of you have got this knowledge of MMM and you are like, no, he's only teaching basic stuff. Please, I want you to understand me very carefully. We have got people of different levels here. So I'm going to be tackling everything, even the basic stuff. Why? Because I wouldn't want to start talking about Greek words that people don't even know, because we have got new guys here who don't even have an idea what a market makers method is all about. And if you didn't watch our first video yesterday, you can go on YouTube and watch our first video. Make sure you watch the first video before you watch this one, because if you start by this one, you get confused. So in general, we say that this cycle is visible on all time frames. We say this cycle is visible on all time frames. It's only that people can't see it, but it's visible on all time frames. Now, so this is generally all about the market maker cycling. This is generally all about the market maker cycling. So I said today I'm not the one who is going to be sharing our the topic. So I'll just go quickly into the market, and then we look at the previous pairs, the pairs that we spoke about yesterday. So these are the pairs that I want us to just make a quick rundown on them, and then we look at other things. All right. So yesterday we spoke about Euro USD, and I explained to you very well that Euro USD actually formed level 3 right there. And I explained to you that we are considering this to being as our first V of the market. Remember, we said M, A, W if we are going down, and W, V, V, M if we are going up. So it means it's level 3, level 1, level 2, level 3. So that is exactly what we talked about yesterday. So this being our M formation, level 3, this becomes our A, level 1. And I friendly told you that on Friday, Euro USD bought during the day, and it left a very good setup right here of going down. Then let's look at what it did today. Let's look at what it did today. Now, looking at our 1 hour chart, you can see for yourself that there is something that looks more or less like an M formation where there is price right now. Something that looks like an M formation where there is price right now. And I know very well that some people fell for this. I know some people fell for this and they tried to buy Euro USD. Yes, you might have got 20 pips, 30 pips, 40 pips and went out with good money. That is very fine. But the general trend of Euro USD, is to the downside. I hope we are together. The general trend is to the downside. So what happened was the dealer left a setup of an M formation here. He closed the market and opened the market. And then what he did today, the dealer is very clever. I will show you from the M15 chart. He actually gave a sell in the morning, and he knew that people were going to feel left out on this sell. So some people entered sell positions right here. Remember the trapping activity that I spoke about yesterday. So he quickly closed this and went up. And I know some of you, your money was taken by the broker, and he pushed up and induced people to buy. And I remember someone came to me and said, Euro USD today is a buy. It feels like a buy. And I said, no, wait, this is not a buy. And what did it do? The next minute, it went down again. What did it do? It induced sellers, while least taking out everyone who took buy positions right here. And what did it do? After that, it induced again buyers. So it means buyers were induced 2 times. And after buyers being induced 2 times, the dealer actually took off and sold. Now, let's go to M15 chart and you see what I'm talking about. Let's go to M15 chart and you see what I'm talking about. So the dealer always follows the market maker cycle. I have to be frank with you. He always follows the market maker cycle. Don't listen to people telling you that here the market maker cycle doesn't work. What? No. Don't listen to that. Look for knowledge. Look for people that know. Look at that. The dealer gave us a perfect M formation of 15 minutes right there. The dealer gave us a perfect M formation of 15 minutes right there. But prior to that, the dealer gave us an LOD. But remember what I said. I said if we are on our way down, we are only concerned with the sell setups. We don't take buy setups. If we are on our way up, we are only concerned with the buy setups. We don't take sell setups. So the dealer gave us an LOD, but you could have taken pips right from here going up to there. That's a good money, but it's good money only if you know what you are doing. It's good money only if you know what you are doing. So the dealer gave an M formation here and ended the week. Now the dealer starts the week right there with that Asian box, and he induces sellers down. He doesn't give a stop hand or what. And I know people definitely will feel left out. They will start piling sell positions right there, sell positions, and it quickly shifts the zone away from them. Now people will start piling buy positions, and those who went in on a sell, they'll be taken out in trail stop losses, even with stop losses that were all around at this level, all around at this level, even orders that were at this level, the breakout buy orders, they were grabbed by the dealer, and the dealer rushed back down again up to that level. And by rushing back down again, he induced others to take a sell again, whilst he was taking out everyone who was on a buy. And after inducing sellers again, he took them out again. But if you look at it at a macro point of view, you realize that we have got a perfect M formation. We have a perfect M formation. So already what we were waiting for was an entry right there. That is exactly where I entered. That is what you were waiting for, an entry right there, and then you go down. I took pictures of these setups. I'm going to show you where I took pictures before they even moved. I took pictures and I even labeled their directions. Our next pair was USD Chef. Here's USD Chef. You can see even right here, there's this black line there. I actually put this black line before there was any move there, because I was already placing it so that I will show you guys. I have the pictures. I'm going to post them on Telegram, the pictures of the move that I predicted before the market moved. Why? Because I knew that according to the market makers cycle, USD Chef, yesterday I showed you that USD Chef is supposed to continue up. And you can see for yourself, it did the same trapping move. It did the same trapping move, but it was a perfect and nice W whereby you take your entry and go. Now check even GBP USD, same thing again. GBP USD, same thing. So these things, they always repeat themselves. So what the dealer does, let me tell you what the dealer does. The dealer actually traps people. These days, the dealer traps people the whole day. The dealer traps the whole day these days. He makes sure that he traps whole day. And when he's done trapping the whole day, he knows that he's gonna throw a setup and move at night. Look at that. Throws a setup and move at night. But I know some of you were going to fall for this. I know some of you were going to fall for this. But this, we don't fall for it because we know, and we said yesterday, that GBP USD is going down. We said GBP USD is going down. So we couldn't fall for a buy setup. We were only supposed to fall for a sell setup. So guys, I want you to understand me correctly and very well. I want you to understand me correctly and very well. If we are going down, fall for setups that are going down. If you are going up, fall for setups that are going up. Don't worry for those who are saying their network is a problem, etc. We are going to post this video on YouTube. You are going to see it even on Vimeo. We are going to post this video. You are going to see it. Now, another pair was USD card. You can see right there. I also placed right there where my entry was supposed to be on USD card. And you can see, I know that some people might have profited there, but that wasn't the setup. Some people could have fallen for this, but the setup was this. So today, as we do our lesson, Arthur is going to assist you on how to know, or rather to identify these things. Some of you might be having questions now. How then do I identify the overall direction of a trend? Let me tell you something. Determining the direction of a trend is the simplest thing you can ever have. The difficult thing should be an entry, not the direction of a pair. Knowing where a pair is going should be an easy thing, but finding an entry, I'll always tell my students that better blow an account because you failed on entry, but having known the direction of the pair, because if you know where your pay is going, you can even see another opportunity. Maybe you were stopped out at entry, then you see another opportunity because you know the direction of the pay. You can what? You can still enter that pay. So during these 14 days, we are going to tackle how you know the direction of a pay. Don't worry, I'm seeing all your questions. We are going to attend to all the questions on all these Zoom sections. Here is another one, USDJPY. Unfortunately, this one is still playing around there, but definitely I could have taken it right there. It's still around that area. It hasn't moved much, but I'm still expecting a move to the upside. I'm still expecting a move to the upside. Like I said, the market will give you fast moves. The market will give you fast moves the whole day and move at night. Why? Because the market only pays the patient. The market only pays the patient. So guys, you need to take note of all these things. You need to take note of all these things. Our last setup that we spoke about yesterday, what pair was that one? I think it should be USD ZAR. We spoke about USD ZAR. All right. We spoke about USD ZAR. And USD ZAR, I think I also posted on Telegram about USD ZAR, and we also spoke about it with the students. And I took USD ZAR right here, and I'm still holding even up to now this whole move. Yes, I know that there was this move right there, but I still believe USD ZAR is supposed to go up. So I decided to leave all this and wait for the upside movement. So in general, that is all, guys, in terms of the pairs that we dealt with yesterday. That is all about the pairs that we dealt with yesterday. I'm seeing people are still entering now. We're around at 200 and something participants. Thank you so much. So this is all I wanted to say in terms of the pairs that we spoke about yesterday. So I'm sure maybe once Arthur starts teaching, maybe he's gonna give some of the pairs of focus in terms of tomorrow. He's gonna give some of the pairs of focus in terms of tomorrow. So don't worry, we are going to address the questions as they arise. Don't worry, we are going to address the questions as they arise. So what I'm gonna do now, I'm going to stop my sharing and then allow Arthur to share his screen. I'm gonna stop sharing and allow Arthur to share his screen. Arthur, can you hear me?
Yes, I can hear you.
All right, so I'm going to stop sharing my screen so that you can start sharing yours, and then you share about London patterns. So guys, the whole point here is we are all here to learn. Please, we are all here to learn. So even if you know these things, but just sit down and listen and learn. We don't want a scenario whereby people want to prove to each other. We are here to learn. So please, let's just, I will be watching the charts page. Let's just listen and give him attention. If you have any additions, I'll be watching the chat box, and we can even give you the permission. Like I said, we just want to find something to do, and this video is going to be posted again on Creative FX. Thank you so much. Take the floor, sir.
Thank you. Hello, guys. I hope I find you well this evening. So today I want to talk about London patterns. So for those that are well versed with BTMM, I know you know about London patterns, but we have got quite some people here that don't know anything about London patterns, that never traded the market maker method. So it will be something which is totally new and different from what they know. So with London patterns, before I go to London patterns, maybe let me just talk about where does the word London pattern come from. So the word London pattern, it comes from the fact that we are talking about setups or price movements that happen in the London session. As you all know that we have got the Asian session, which is the first session of the day. We've got the London session, and we've got the New York session. And from our Beat the Market Maker template, you know, we use it to give us some sessions. And we have this blue session, the session that is covered in the blue box. We call that the Asian session. It's unfortunate I didn't put the New York session, which is around this area here. It is on the template. It usually is indicated by a red rectangular box, but it's of no much use. That's why I decided to remove it. So we are talking about setups that happen coming out of the Asian sessions, since these are the first sessions that open a new day. So most setups in BTMM that we trade, they appear after the Asian session. So we actually look for setups that come out in London in the New York session. So in BTMM, we usually trade in the London in the New York session, although there are also setups that can come in the Asian session from pairs like there are pairs that are paired with Australian dollar, the Japanese yen, and the New Zealand dollar. Those you can expect them to give setups at night during the Asian session. But with normally we expect to trade pairs coming out of the Asian session, that is in the London and the New York session. So first things first, I want to talk about maybe the daily structure of what we call a daily structure. So a daily structure is a setup or a price movement which roughly happens each and every day. So we believe that, not we believe, but every day we have got an Asian session which starts a new day, and then there is a price movement to the downside, then it goes up, then goes back, ends the day in a consolidation for the next day. So this is what we refer to as the daily structure. So if you remember a structure like this, it is a structure that appears almost every day. We see something like this. A session starts with an Asian session consolidation, either does a stop and high or a stop and low, then ends the day back into consolidation. So we call this the LOD. We call this the HOD. Then we retrace off of the high of the day back into consolidation for the next day. So if you remember this structure, even if I go to actual live charts, you see that is the pattern which presents almost on a daily basis. We've got Asian session consolidation. We end the day back into consolidation. We start again. It's almost the same structure every day. Even if we go back, this is the structure which forms on each and every daily basis. Starts with our consolidation, and with our consolidation, which is roughly the same thing which happens almost on a single day. So this is just general. So when you talk about London patterns, we are talking about the setups that form coming out of the Asian box, like coming out of this Asian box. Those are what you call the London patterns. So we have got three types of London patterns that we have. Three types of London patterns. So with the three types of London patterns, we are talking about, like I said, we're talking about setups that form coming out of the Asian market, which form in the London session usually. That's why we call them London patterns. But sometimes the setup might even extend even up to the New York session. But how they present is there what we call the London patterns. So with the first type of the London patterns, we are saying we have an Asian box. We've got an Asian session consolidation. Then we have a stop hunt, which is a false move. We see this on the 15-minute time frame. So the first one, which is the type 1, we expect the market makers to give a huge stop hunt, which goes outside the box. And usually the dealer hits the 200 EMA and then reverse. So we are talking about a break of price coming out of the Asian box. They create an M formation, then they go down. So usually they come to hit the 200 EMA, it goes outside, usually comes to hit the 200 EMA and create the high of the day there, then it goes down. That is the first type of the London pattern. So that's type 1. I'll show you a few examples after this. Then you've got type 2. With type 2 now, it is one whereby coming out of the Asian session, the dealer respects the high and low that is set in the Asian session. Coming out of the Asian session, the dealer respects the high and low that is set in the Asian session. So the dealer just goes to that high and then goes down. That's type 2 London pattern. So the dealer maintains the high and the low that is set in the, and usually we can have the 200 EMA close to the high in this case of the Asian session. Then we've got the type 2. So the opposite is true even coming from the downside. If we just invert it, it will be a W, which is the opposite of the uptrend. This is for the downtrend. Then we've got the type 3 of the London pattern. With the type 3 of the London pattern, we have, we'll be coming from a peak formation. Then the dealer, they respect also, the high and low of the Asian session. But in this case, we would have the 50 EMA crossing almost at the mid-range of the Asian box. That's the 50 EMA. And we have an M formation forming there to go down. So this will be the type 3 London pattern. Type 3 London pattern. So these are the Asian boxes. These are the Asian boxes. These are Asian boxes. These are Asian boxes. This is the Asian box, which is represented by a blue box in the actual chart. So I now want to take you to the actual chart so that you can actually see these patterns, because they form every day in the market. So looking at this Euro US dollar, yesterday, this was a type 1 London pattern. As you can see, we had our Asian session consolidation. Then we have got our stop hunt, a break out of the Asian box. We created our W, then we went up. This is type 1 of the London pattern coming from the downside. Let's look for, I'll also look for the one coming from the upside. And here, this is a type 3 London pattern, which is here. You can see the 50 EMA there. The dealer respecting the high and the low of the Asian market, and almost at midway of the box, that's where we have our M forming. Then the market starts to go down, forming a type 3 London pattern. Now let me look for a type 2 London pattern. Here we had a type 1. Let me look for an example of the type 2. I think I have something on my desktop. Let me look on my desktop. I have the type 2 London pattern there. So here's an example of a type 2 London pattern, which is here coming out of the Asian box. The dealer almost respected. We can see that they are almost within the high and low of the Asian session. Then we've got the 200 EMA. The dealer makes a W formation, then decides to go up, calling that a type 2 London pattern. Let me look if I have, here we have got another example of a type 3 London pattern coming out of the Asian box. You've got the 50 EMA. The dealer forms a W, then goes long. Then let me see if we have, we can see a type 1. Here also we had a type 1 London session, whereby we are seeing a break of price from the low of the Asian box, gives a W formation, then goes long. So these are the types of the 3 London patterns that we have. So with the London patterns, we are talking about the possible 3 setups that form coming out of the London pattern in line with the trend of where the market should be going. So even if our cycle is going like this, even in a downtrend, our cycle is going like this. We are now expecting either of the 3 London patterns to form in any position in the cycle. But the trades that you're supposed to take, we take, like he said, Bongeni said, we are going to take trades that only favor sell setups if you're in a downtrend. If you're in an uptrend, we're going to take setups that favor buys in an uptrend. So in a downtrend, it means we can expect any of the London patterns to form anywhere on the cycle. When I say anywhere, I'm talking about when on any part of the daily structure, because a cycle like this, usually it presents like this. We have got that. Then, like I said, we end the day back into consolidation. So from here, you can expect either the dealer to give you a type 1 London pattern and goes down, ends the day back into consolidation. Here, you can decide to give you a type 2 London pattern and goes down, ends the day back into consolidation. Then if it continues to, in this case, we actually have done 3 ADR, because this will be a level 1 drop. This will be our level 1 consolidation. This will be our level 2 drop. This will be our level 3 consolidation. If the dealer decides to continue with the trend, if they are resets, you can expect them even to form a type 3 London pattern coming out of there. So it's about any way they can form. It's not like we know which London pattern they are going to form today or tomorrow, but waking up and looking at the charts before the dealer even do a move out of the Asian box, based on the position of the EMAs, you are able to tell the type of London pattern there they are likely to form. I hope I've answered in a way that they understood. I don't know if there are any questions. Bongeni?
So far, I'm not seeing questions. So guys, what I want you to do, I want you to send send your questions on the chats page in regard to these London patterns. Maybe just a minute. I wanted to add something so small. Let me see. Right, on your page. So what he was simply saying, drawing, this is our 1 hour market makers cycle. Are we together? So it means on M15, because this is a peak formation and it takes something like 2 to 3 days to form. So maybe we can have something like this. HOD, come back down, LOD. In consolidation, maybe we start with LOD, then we go to HOD, we end the day in consolidation, then we do that, then we go down, end the day in consolidation, we do that, then we go down, end the day in consolidation. So what happens is this then becomes our peak formation. I hope this makes sense. This then becomes our peak formation. So it already shows you what the dealer is doing on a daily basis on these areas. So that's what he was trying to explain, that they form in any area. So you are only looking at where is your EMA in regard to these London patterns. And in normal cases, we are not saying that all London patterns, they form at 200 EMA, but in most cases, you will find them where at 200 EMA. So that's only what I wanted to say. So I'm gonna read your questions, but I'm only going to take questions that are in line with our topic. So I'm sure Arthur is going to answer for us those questions. Someone is asking, do they apply to binary.com indices? Do indices follow the London patterns? Does the London patterns apply to currency pairs or not? Okay, I don't know. You can take it.
Okay. binary indices, they also follow London patterns. You can also see London patterns forming even in binary indices.
So I hope, guys, you are answered. You can check most of the charts. You can check the indices like every day. Just check the indices. You'll find maybe let me see.
I have something. Let me share my screen.
Yeah, you can share your screen even if you have an MT5 of binary.
Yeah, let me share my screen.
And then we take a look at it. Yeah.
Yeah.
Because people always ask this question.
We are on step index. I'm sure here you can see we have got a type 1 London pattern forming at 200 EMA. Can you see that?
Yeah.
Then look for, here we've got, this is a type 3 London pattern, which is here. Then let's see what we have here. We've got a type 1 London pattern. Let's see if we can find, we haven't found a type what?
2.
We haven't found a type 2. Here's a type 2 London pattern. Here, whereby the dealer respects the high and low of the Asian session. We've got this one now. I can't really call it a London pattern, sorry, because it formed in the Asian session. So let's look for a type 2. If you manage to identify any, please let me know. Let me try to look on another pair.
Maybe just try V25. I normally see it on V25.
Let me try V25.
There you go.
Yeah, there we go.
Right there.
Yeah, we have got a type 2. The dealer respected the high and the low of the Asian session. He gave us an information right on the just below the 200 EMA. Then the dealer started to go down. So that's a type 2 London pattern.
And the other thing, guys, when we are saying London pattern, we are not saying that you should trade during London sessions. These patterns can also even appear during New York. They can appear during Asian, but they are called London patterns, but it doesn't mean that they are only traded during London session.
Yeah, like I said earlier, sometimes it's not like they appear only in the London session, because the dealer sometimes might decide to form the pattern even in the New York session, but it doesn't change the name from London to New York pattern. It's still a London pattern.
Then someone is asking, how do you use patterns with indices if there are no sessions? But you can already see the template that he is using here has got sessions and a TDI. He just removed the New York and the other sessions, but the sessions, they are already there. What we are simply saying is, guys, take the same knowledge that you know and use it anywhere. It applies anywhere. It doesn't matter where you want to use your knowledge. It's the same as someone who is using price action as a strategy. Even if you take him to binary options, he can still go and trade and draw a trend line and show you that this is the trend. So take the same information. Don't be biased on only currencies. They also work also on indices. It doesn't matter if you know the session times or you don't know the session times. Install the template, you will see your patterns. They will come out clearly. So I'm just trying to address your questions that are coming out here, because some of them wouldn't want to waste others' knowledge. Hello, what if someone is saying hello? What if they don't form on 200 EMA? Is it good to sell, or we only take on 200 EMA?
Like we said, with London patterns, it doesn't necessarily mean that they form exactly on the 200 EMA, but most of them, they form around the 200 EMA. So even if the EMA is not there, if they give you an M is an indication that an HOD or an LOD is formed. And usually the dealer doesn't go back to once to the high or low if they have set the HOD or the LOD. So you can still take it.
Yeah, very true. Someone is saying, do levels of rise and fall work on indices? I'm not sure what he's talking about. If the person is talking about the pushes in indices, the 3 pushes of the intraday, they do appear, the 3 pushes of intraday. You can actually see them. Some of them, sometimes they cannot even appear. If you can go even on currencies, sometimes the 3 pushes appear, sometimes the 3 pushes, they don't appear. But the whole point is, are you seeing the pattern? It's not like the market has to follow a textbook movement. The whole point is, do you see the pattern? Someone is asking, what is the name of that green EMA there?
That one you have to come to my inbox, then we address that. It's called, somebody called it a green paper.
All right, for those who want,
don't worry about the green EMA, guys. It's not exactly directly related to BTMM. BTMM have got the 5 main EMAs that we use. So I use the green EMA for other things. Maybe if you have maybe if you were one of my students, they know where we use it and how, but it's unfortunate. So for me to just tell you, then it might confuse you, because there is a certain way we use that EMA, and we use it for something.
Okay, someone is saying that, can you redraw the type 2 and type 3 patterns and explain both? I missed the explanation. And then someone is saying, you said based on the EMA crosses, you can predict the London pattern. May you please illustrate? So I'm thinking that this is one question, but asked in different ways. So maybe you can just draw the type 2 and the type 3 and illustrate for them.
Okay. Type 2 and type 3. They were asking, how do we know that they're going to form, right? So usually, when we talk about these London patterns, we will be coming from a peak which was previously created. Then usually we have, let me share my screen. Okay, there. We are coming. Let me draw the peak instead of this. So let me draw the peak. We are coming from the peak formation. Then we know the 50 EMA usually move closer to the candles. You can find the 50 EMA moving closer to the candles, and the 200 EMA will be somewhere further away from the candles. Let's say we have a 200 EMA there. So then let me draw this. Let me use undo. So for us to know what type of London pattern we are likely to form, like I said, it's all based on the position of where the EMAs are coming from the peak. Coming from the peak. Coming from the peak. So let's say we have a peak. So from the peak, that's why we have a variation of all the types of London patterns. So usually we have this, let me use blue. The 50 EMA usually move closer to the candles, and the 200 EMA usually further away from the candles. So with the 200 EMA, if you see it further from the candles, we know that when a stop band is going to be done for type 1, is mostly likely to go and touch the 200 EMA, then it goes down. Then this is for type 1 London pattern. This will be the 200 EMA. This will be the 50 EMA. Then for type 2 now, we're going to have for type 2, we are going to have the 200 EMA. Almost at, no, that's not it. We're going to have the 200 EMA there. So coming out of the Asian box, when the 200 EMA is there, we know that price is just going to go close to the 200 EMA and goes down. That's for type 2. Then for type 3 now, for type 3 now, we can have the 50 EMA. Sometimes for type 3, you can have even the 200 EMA closer, or you can even have the 200 EMA even, let me use black. Are you the one who's drawing?
No.
Let me wrap it off. You can have the 200 EMA, let me use black. The 200 EMA, you can find the 200 EMA, sometimes it will be, they all cross inside the Asian session. Then you can expect your stop band to form at there, to form a type 3, then goes down. So sometimes the 200 EMA might both cross the Asian box here, or sometimes the 200 EMA might not even be there, might be somewhere above there. So I hope I've answered well and clearly.
Yeah. Guys, thank you very much. Now it's 11:02. So basically, we are going to end our session. So let's prepare for tomorrow again. Someone is saying that Ginimbe apedza. So we are going to end our session. So what we are going to do is